Good day, guys. Once again, we are welcome to my channel. And then today, what I seek to do is to take us through the exact trading model I use each and every day to execute all my positions. So, without wasting much time, all you do is hop onto the chart and then go through this model. In fact, most of the things I am going to talk about is nothing new. It is all over the internet. There are various traders teaching a two or three of the same model that I've put together. But what they don't normally do is putting everything together to make a meaningful model. Most of the time, you go into the internet and you come across someone talking about internal range liquidity, someone talking about market maker model. But how to piece everything together for people to understand exactly what to do or what to look for in the market, it's sometimes rare to find. And most of them that try to do it also do not explain it much into details because normally some of them want to make more of profits out of their various services, and they will leave you hanging, thinking that you follow their links to their channel to get more details. Well, I'm doing everything for free in my Discord server. So without wasting much time, you hop onto the chat and then go through the whole model. After that, I'll also take us through an execution I had on GU this week with the same model. So first of all, you go through the overview of the model. That is, I consider as an intraday trader, I mostly execute most of my trades on the 15-minute chart. So if I consider my time frame alignment, that means I'll be coming off from a weekly key level into a 4-hour market maker model, and then my lower time frame entries. Well, I'm not fixed on the 15-minute chart when it comes to my entries because sometimes the 15-minute chart is unclear. In such scenarios, what I do is I can drop down to the 5 or 3 minute chart. I don't trade 1 minute chart. It's either the 15, 5, or the 3 minute chart. So, without wasting much time, we will start with a weekly or daily time frame. Yes, weekly or daily time frame because sometimes the weekly chart is not all that it's not all that clear. Sometimes there are times that the weekly chart is not all that clear. In that case, the daily can aid you to find the buyers for the week when you consider the weekly profile. Okay, so in this scenario, the market is trending in a bullish direction. So that is a bullish bias. So price come off a weekly discount theory, expands, retraces, expand, retraces, and expand. So when I come to my weekly charts, what do I look for? My daily range. That is the range that recently took buy side and what sell side liquidity. So when you observe this zone, price took sell side liquidity into a bullish PD array on the weekly charts. It expanded into a bearish array, retraces back into a discount zone. Here, that is an internal range liquidity or order block before it expanded. So this is what I look at. So when price comes into a key level on a weekly chart within a discount array and then I am bullish, that is the market is trending bullish. That is the perfect area to look for buys. So immediately price come at this zone, what I do is I hop onto my 4-hour chart. Now, just as we went through in the overview, from the weekly chart, sorry, I go onto my 4-hour chart, and on the 4-hour chart, I am looking to set up a market maker buy or sell model. So, market maker buy or sell model is one of the things ICT teaches a lot. And in one of his videos, he confessed that is almost the same way he trades each and every day. And this is one of the ways to really understand what the market is doing. It helps you to time your entries. It tells you when and where to even look for entries. So this is a very powerful tool that I've incorporated into my trading strategy. So when price came off our weekly key level in a discount zone, we are looking to set up what? A 4-hour market maker buy model. So here, when price reacted into the weekly internal range liquidity or order block in the discount zone, what we are looking for is there any SMT, that is smart money tool or technique with correlated assets that is telling us whether market is going to reverse off that array or not. So that is what we call the smart money reversal. So in this case, if you consider ICT 2022 model, there is a market structure shift here. That is on a 4-hour chart. So as price hits a weekly discount array, we are expecting to see the 4-hour chart shift structure or change state of delivery. So when that happens, we are certain that price is actually what? Reversing off the weekly discount array, targeting the weekly external range liquidity or old highs. So on the 4-hour chart, when this has been established, a reversal has been established, what we are looking for is to enter off at this level. That is when price come back to respect the change in state delivery or order block on the 4-hour chart. So when price respects this key level on the 4-hour chart, all that we are going to do is drop down to the 15-minute chart. So here you can see this is a 4-hour key level that price is reversing from on the on the 15-minute chart. And this is a sell model. But when you reverse everything here, you get a buy model. So if you're able to understand the one side of the curve, the other side of the curve also becomes easy to comprehend. So everything that I'm doing within the 4-hour market maker model, I don't just hop onto the 4-hour chart and then I just marking what do you call it, arrays anyhow or anywhere. Everything that we do, we plan before we execute. So on the 4-hour chart, we also consider what's the premium and discount levels. Premium and discount levels. You wait for price to retrace into a discount zone. That is when you are in a buy program. So when that happens, you are looking for a reversal to happen on the 4-hour chart. That is from the 4-hour discount array in order to price to expand to your target. So immediately price come back into our change state of delivery, that will be our low risk buy. And then price will expand from that array into a 4-hour key level, retrace, expand, retrace, and then expand till the weekly external range liquidity is taken out. Price will not always retrace, expand, retrace, and expand. Like I said, if you go through the EBITDA cycle, you understand that there are times that the markets may consolidate, mostly when there are no news events. You realize that the market will consolidate. And then from consolidation, if you consider AMD, that is accumulation, manipulation, and what? Distribution model. When we consider it, you realize that after consolidation, expansion will continue. But in an AMD model, that expansion is more or less a manipulation to trick inexperienced traders to go the opposite direction before price reverses to the actual direction. So on a 15-minute chart, when price have moved away from a forward key level, what we are looking for is a change in state delivery on the 15-minute chart to enter. So when this happens, so on the 15-minute chart, after our change in state delivery has been confirmed, we can then position ourselves at change in state delivery or order block, our stop loss at the 4-hour, where the 4-hour key level was tapped. and then we can target our 4-hour external range liquidity. The same way, that will be our low risk sell or buy. The same way, after price expands away from the change in state delivery, a key level will be created at a discount level for price to retrace back to it before it goes again. So if this happens, so all the market maker model has been executed. So the same way you have our low risk sell, our first stage distribution, then second stage redistribution. There are times that price can actually go beyond the usual three stages. Sometimes there can be four stages. Sometimes it can also end at just first then second stage. Sorry, the low risk sell and then the first stage. That is in highly volatile markets. Price can just offer just two stages and then the 4-hour external range liquidity is hit. So that is mainly everything about the model. But there is one key thing we should also consider: our time openings. Our time opening. That is the daily opening and the New York 8:30 opening prices. This is a very important thing to also consider. So if you are looking to sell, what you are supposed to do is to sell above the daily open. If you are looking to buy, you buy below the daily open. Same way, if you are looking for sales during the New York session, you are expecting price to raise liquidity above the New York 8:30 opening price. Raise liquidity above the New York 8:30 opening price for price to what? Descend lower. So how do I use this in my everyday trading? What we can see here is also a 4-hour expansion candle opening. So like I said, on a 4-hour chart, as we are trading 4-hour internal range liquidity to external range liquidity, what we are looking for is for price to reverse when it hits a 4-hour key level, either in a discount or premium zone. That is depending on our bias. So there are reversal signatures that will be put in place to tell you that, okay, at this key level, price is actually going to reverse. So when you couple that with a lower time frame, that is the 15 minutes, the 5 minutes, or 3 minutes chart change state delivery, we will be able to confirm whether price is actually reversing or not. So if you consider the candle range theory, that is something that I will want us to go through some other time. But when you consider the candle range theory, I can just uh, briefly introduce us to the candle range theory. So let's say this is our candle one. A 4-hour key level is maybe somewhere here. Let me say 4-hour order block. 4-hour order block. Okay, so the one hits the 4-hour order block like this. We are expecting that candle two will also what reverse from the 4-hour order block. There are times that candle one can hit the order block. Candle two will also come and manipulate candle one's eye. So something like this. Before candle three what expands lower to the 4-hour external range liquidity. Now this concept I'm trying to teach, there are diagrams that I've posted in my server that actually teaches all these things. There is one guy, Garrett. He has actually made those diagrams very simple and very informative, and there's no need for me to also repeat the same concepts. He has done a good job, and I credit him for that. I've learned a whole lot from him. So, with time, we will go through the reversal patterns and how they are being used at the various key levels to anticipate reversals. So, that is it about the reversal of the 4-hour key level. So, as we've discussed, price will rate liquidity above the daily open. That is when we are in a sell, or above the 8:30 New York open price. When we are in a buy, price will rate liquidity below the daily open price before it expands higher, or rate liquidity below New York 8:30 open price before expanding higher. So I know there will be a lot of questions after this video because these things are very technical, and then putting everything together is a huge information to grasp. But I'll always be available on the page to answer each and every question. I'll be available in the server. Whoever don't understand anything, like I said, I'm devoting my time free of charge for us to understand this concept. Even if one person understands how this system works, I'll be okay with it. The only thing is I acquired this knowledge for free, even though I spent several months going through chaff. I read a whole lot of books, watched numerous videos, and none of them got me where I wanted to be. But this model that I was able to piece up together to suit my trading style actually is doing the magic. And everybody can see that in my server. I call up trades even before they happen. And price mostly, not always though, mostly goes to my direction. Now, this is the end of the presentation on my model. If anybody have questions, kindly send it to the server and I will answer them appropriately. If the need be that I make another video explaining things further, I'll also have time and make that video. So thank you very much. And then one more thing is I took a trade last week in the server. I took a trade last week in the server on GU. I took a trade last week in the server on GU. Yes, that is it. Where I placed my sell limit and I announced it in the server, and actually it went through right through to my target. So in the server, I also presented my idea, this time from the daily key level. That is the daily inversion fair value gap. I anticipated this happening in the previous day. That is a day before I took this trade. I anticipated this happening and I called it out in the group. I called it out in the group. Yes, this is it. I called it out here. And I think I made a statement that it pays to wait. FOMC has confirmed bearish weekly buyers on GU. We'll be looking for shorts tomorrow from the daily inversion fair value gap. This is what I was talking about. I knew, even though the inversion had not occurred yet, I knew this movement caused by the FOMC was going to invert this daily fair value gap. I knew this was going to happen. So fast forward the following day, that was what I looked for. That was what I looked for. The inversion occurred, price reacted to the daily order block and the daily inversion fair value gap, closed outside it, and that was where I pounced on my setup. So on the 4-hour, we can see that price reversed inside the 4-hour internal range liquidity, targeting the external range liquidity. Now, in this case, I dropped onto the 5 minutes because the 15-minute chart wasn't clear. So I dropped down to the 5 minutes. And as you can see, this is my New York 8:30 open price. This is my New York 8:30 open price. So Before the 4 hour expansion candle was formed, this 4 hour expansion candle actually it formed. That was the what do you call it? I think that was the 10 a.m. expansion candle. Sorry, I don't think this is what I'm looking for. This is what I'm looking for. This was the 10 a.m. expansion candle. I couldn't catch the high of it, but I was able to anticipate the 2 a.m. expansion candle. I'm talking about GMT time, not what do you call it? New York. GMT, since I'm in Ghana, mostly I use the GMT a lot. So I anticipated the next candle. So this was where the next candle actually was about to form. Look at where it ended. Yes, you see, this was where it formed. That is the 2 p.m. 4 hour candle. Now look at something here. Actually, I was supposed to place the trade here, looking at my model, because I trade 4 hour expansion candles. So if the previous 4 hour candle has expanded, the next thing I should be looking for with my model, I'm not saying that is how I trade. Then next thing I'm looking for is the next 4 hour expansion candle. So actually, I should have waited for this high to form. But the reason why I didn't wait for this high to form, but rather I anticipated it forming within this level, because actually the high forms. What I'm looking for is trade off this order block. This order block. Let me see the end of my trade. Yes. So this order block. Actually, this was where I was supposed to place my trade. This order block. This order block. Not this. My model. Because this is the high. And I'm anticipating that okay, if you're in an expansion zone and then I'm supposed to trade the 4 hour expansion candle. Now the manipulation leg of the 4 hour expansion level should rate liquidity either above the daily open or the New York E30 open price. But this is what occurred here. Before that 4 hour next expansion candle, because actually there were two expansion candles, the 10 a.m. expanded but didn't reach our 4 hour external range liquidity. So the next candle that's opened, that is the next 4 hour candle, I anticipated that it is also going to expand till it reaches the 4 hour external range liquidity. So the 4 hour candles high, that is the 10 a.m. GMT candle, before it closed bearish, it had already raided liquidity above the New York E30 open price. It had already raided that liquidity here. So the next 4 hour that was going to open, because this manipulation has already occurred, there was no need for price to also go there to raid anything. So with that in mind, I decided to place my trade here and then my stop loss over there at the order block that raided liquidity. And that was what happened. The trade went through just as expected. Just as expected. So this is another analysis I performed, even though price didn't go my direction. So there was no entry for me. So there is no entry for me. So everything that I do on the chart is a calculated effort. We don't just hop into the chart and start executing trade. We are looking for if this, then that approach. If this happens, then I'm going to do that. If it doesn't happen, I'm out. That is how disciplined a trader should be. You don't just see anything at all and you just enter the market. You just have to be patient and then wait for price to come to you. You don't chase price. So if you see all my trades, all my executions are limit orders. I sit down comfortably for price to come to me. I don't run after price. And I think if we are to adapt this strategy, it will go a long way to help us see profitability in our various executions. So that is all for now. I thank you guys for being patient and then going through all my videos, my call outs, everything. And I know with time, it is training is difficult, but with patience, with perseverance, with discipline, I know we can all make it someday. Thank you very much and have a great day.